Top down, macro to micro. Big picture outweighs the little picture. Forest to trees. Seeing the big picture. What am I talking about? Finding an advantage in the stock market. My investment strategy starts with a top down philosophy. So you know the catchphrase: study it, analyze it, adapt it. The top down approach to investing focuses on the big picture, or how the overall market is trending. Then it will look at the performance of sectors or industries, and ultimately stock prices. If the sector is doing well, chances are the stocks in those industries will also do well. Imagine, imagine the whole global market moving upwards. Further breaking it down, imagine the United States market is doing well. After that, imagine that the sectors, certain sectors, are outperforming other sectors, and then finding individual securities in those sectors. That is the top down philosophy. Looking overall at the macro picture, then breaking it down into sectors and finding the best performing stocks. We are trying to wheedle down from a great universe of stocks, a global market, to an individual market, to the sectors, to individual stocks. What I mean is that you should work from the large question: how's the overall market? How is the global market? How is overall the United States market, S&P 500, Nasdaq's? Then break it down to a smaller component. The sectors. Which sectors are performing the best? Is it technology? Is it consumer products? Is it gold? After you break it down to the sectors, you find the individual stocks which are acting best technically. So let's start. Overall market analysis. What's the trend of the market? If it's negative, you'll want to do very little buying. Even if you see certain stocks doing well, they will have problems if the overall market is going lower. Remember the COVID-19 days when it first started to come out. No matter what stock you picked, it went lower. Your probabilities of success are quite low when the market trend is going against you. Probabilities are very high if the overall market is in your favor. After we go over the general macro to micro, we will give you some ways to anticipate the overall market. Which few groups look the very best technically? Which sectors are outperforming? You will see if a certain sector is doing well and a stock is breaking out, it will outperform a stock in a poor sector that is not doing well. So again, find the sectors that are doing well. Find your indicators which show those sectors are doing well. You will see a greater percentage in the individual stocks that you pick. Pick the best performing stocks inside of a sector. Follow these 3-step process. You will find yourself heavily invested in the best acting stocks when the market is powering ahead, and sitting on large cash reserves when the overall trend turns bearish. some indicators and strategies to help us. Definitions are one thing, but what are we looking at? What indicators do we use to tell us the macro, the long term effect? So, how do we predict the overall market? First, I am a rule based trader using a weight of evidence. There are over 50 indicators you can use to anticipate the market. No one indicator will be a magic key, but a lot will give you clues. This channel goes over the 50 indicators, but let's go over some long-term indicators to get you started on predicting the macro. The first step is to try to figure out the macro, the overall picture. At this stage of your trading, it's not so important the indicators you use. You will figure out which indicators you want. Is it the MACD, the CCI, the RMO, the ADX? Right now, what is important is to understand the mythology of it. Okay, let's get started. How am I thinking? I take a look at the overall indexes. S&P 500 securities, NYSE Composite Index, Nasdaq, Dow Jones Industrials. Are they headed on an uptrend? Are they above their 30-day moving average, 200-day moving average, 150-day moving average? All on uptrends. I look at the RMO and I say, is the long term bullish? Yes. Swing trade 2, bullish. Yes. Swing trade 3, bullish. Yes. I look at the individual securities in the RMO. They are all reaching 65 to 75% on the bullish side. You understanding what I'm saying? You're building a weight of evidence that it is a bull market. You look at the MACD, relative strength, CCI, and many other indicators, all screaming bullish. It also works on the other side. When you do your stage analysis, and a lot of the companies in the S&P 500 are looking lower, bearish sign. You look at the S&P 500s, New York Stock Exchange, etc., and they're all breaking down, gapping down lower. MACD says lower, RMO says lower. Of course, going against these trends will not be a good idea. Or going with the bullish trend could be a good idea. It's all building 5, 10 indicators together and saying that these indicators show me what the macro picture is, what the overall picture is. If it says bullish, go bullish. If it says bearish, stay away or start shorting into the market. These indicators will be videos inside of this channel. So you can pick and choose some of the indicators that you want. Some of the most popular ones are stage analysis, trading above the 30-day moving average, RMO, CCI, RSI, MACD, New York Stock Exchange Momentum Index, Pension Fund Cash Ratio, Bank Cash Ratio, New York AD Line Daily, New York AD Decline Line Daily. So many indicators you can choose from. VIX, VXN. Again, all these will be inside this channel, so you will be able to nail the overall market picture. The next step is to look at the sectors. I have a list of over 50 ETFs, and I go through each one of them to see, are they on an uptrend or a downtrend? Even the sectors, being a lot of positive sectors, are showing it's a bullish sign. And if a lot of the ETFs are breaking down or bearish, it's a bad sign. But again, in the bullish uptrend, there will be specific sectors that outperform the rest of the sectors. All these stocks will perform better. A stock breaking out in a positive sector will outperform a stock breaking out in a negative sector. This is why the sectors are so important. You must put in many indicators, just like you did on the macro side, to the sector side. Find a super powerful sector or a few super powerful sectors and go long or short depending on the scenario. Then you found the most powerful sectors and you break it down into individual stocks. You can use many indicators to see which stocks are breaking out or which stocks are on the uptrend. Many of the same ones that you use for the macro, to the sectors, to the individual stocks. Again, this is only to show you a philosophy: macro, sectors, individual stocks. It is a winning formula. The last 2 minutes, I gave you a perfect scenario. First, I've always told you throughout all these videos, not one indicator works all the time. Not one indicator is the holy grail. It also works this way too. A lot of time you need to use what's called a weight of evidence, because not all the indicators will line up perfectly. Out of the 50 indicators, you are using a balance to understand which direction the macro is going, which which sectors are the best, and which individual stocks are the best ones to use. So this is why a weight of evidence is important, because it won't line up perfectly, but there'll be a great percentage and saying the probabilities of this happening because of 10 indicators, 15 indicators, or 50 indicators is a good sign. I have seen that initial breakouts are the best time to get in. I have seen the first breakout the most powerful, followed by uptrends. And in the uptrends, I usually scale down when certain RSIs or RMO exit signals get high, and then when it backs down to reposition into certain positions. So again, the first initial trade is very powerful. You should look back in history and see these initial first moves, especially when the market is bullish, turns bearish, and then makes the initial bullish move. When the macro is positive, it is a great uptrend. The top down approach is an effective system. It is an effective philosophy. What you need to do is define the indicators or the oscillators you use to decide on the macro picture. The overall market is the most important part in picking individual stocks. Yes, how the market goes will decide on how effective your returns are. If it's in a bear market and everything is going lower, trust me, it will be almost impossible to find the needle in the haystack. But if the market is accelerating to the upside, it will be very easy to find winners. You don't like to go short. Have huge cash when the market breaks down. And when the inevitable bottom hits or close to the bottom, and you see a lot of the indicators turning upwards, imagine if you were cash heavy in the COVID-19 days or the September 11th days. These are the times to make major gains, and the overall market will help you decide on this. So the next step is to watch some other videos: MACD, RSI, RMO. What is my investment strategy, my philosophy? These videos are on this channel. Please subscribe, watch a video, and you know what I'm going to say next. Study it, analyze it, adapt it. Peace.